Hey traders, Raghee here, and in this update, probably the biggest question that I've been getting throughout the day today is where is gold heading next? So let's backtrack just a few sessions and talk about what the plan in gold has been, why I have been bullish. It actually has nothing to do with the structure of gold, but rather the direction in real yields, really the direction of rates, and the disconnect or the decoupling of gold and the US dollar. So first of all, what's the play in gold and what are the levels that we have been watching and taking advantage of? So first of all, I like to share with you guys, when we have an alert, the way that we structured it, when we put the trade in, all that good stuff I think helps you guys understand, why we took the trade, well, in the first place. So the initial setup in gold was back on the 19th. So put that within context of today, the 29th. So our setup in gold was on the 19th. But notice that we're not actually getting in automatically on the 19th. And this play was really with the GLD ETF. But whether you're playing micro gold, mini gold, or full-size gold, it really doesn't matter if you're playing the GLD ETF options. You need levels from which the trade is actually going to trigger. So the idea was to buy the 168 calls, which we did, as the market sunk down to 169.05 and 168.05. And you'll notice yesterday with a low at 167.72 and the low on the day before that at 167.93, we had actually two different opportunities. Heck, I think we had an opportunity possibly on the 26th, but I know for sure the 27th and 28th, the market sunk down to both the moderate and conservative trigger. So we had two levels and many opportunities to build that long position with the GLD 168 call. Now, one of the things that I did is I gave traders the opportunity to think about, really assess where are we going into the FOMC. And these are really important questions to ask. Yes, the market, the trade is up and it was a winner and we hit the target. As you can see, first target was at 170.90. But what I want you to think about is, what are you willing to risk, right? These are things that we do in the mastery. And I'll talk more about this in the webinar that's coming up next, actually this coming Monday, the 2nd at 8 p.m. I'll talk more about this process, but let me give you a little transparency into the things that we dealt with. Clearly we got in and the market moved sideways for a while. Okay? So how do we keep from getting out, and what would have been one of the reasons to get out? Well, we're always risking a certain percentage of premium paid. Okay, that's number one. Now, one of the ways that we can decide to reduce our risk and not deal with the potential for volatility is to use a time-based exit. The FOMC would have been a fine time to say, you know what, I don't want to take the added concern of maybe the market gapping down in gold versus gapping up, right? And these are risk-based decisions. And everyone should have this eject button built in to every trade, all right? Because here I am, it's a winning trade. Why am I talking about risk? Because everything hinges on risk. Everything is understanding, well, how much did the trade cost me? And how much of that premium am I risking? Well, this trade was pretty much sitting at break even to a slightly positive yesterday with the Federal Reserve. So it wasn't that we were taking a bunch of heat and had to get out. But I always want you guys thinking about this. I know it's a very unsexy topic, but this is how we keep from risking too much in a single trade. And this is how we keep an even keel and keep from panicking when we have potential high volatility events. And again, how do we keep from panicking? We're always assessing where that eject button may be and when we might want to use it. And we're always cognizant of keeping our options cost and ultimately our risk exposure minimal in our account, so that if we are wrong, it's not ever going to risk ruin. In other words, put you out of business as a trader. Right? And this was nowhere near that. But if we stop to think about it, and I hope these are really things you'll think about next time you put on a trade. How much of my account am I risking? Not how much of your account are you spending, but how much of your account are you risking? We're going to talk about risk and budget and affordability and low cost options, and a lot of that on Monday during this webinar. So if you're kind of digging a setup like this, you're going to love what we're going to cover. And so ultimately what we have is a nice move to the upside. Okay, now what? Today we took a target. Today we paid ourselves. Today was T1, 70.90, just like we talked about. Today is the 29th, and look at the 19th. We already had the full plan laid out in front of us. That's the way that I like to communicate trades to everybody. You know well in advance exactly what I want to buy, where I want to buy it. So you're acting at the same time, not necessarily after I am, right? It's a much more proactive, teach yourself how to fish, cast your own hook, right? Kind of approach. So then the next question is, all right, Rag, I get it, but what's T2? I'm actually looking at T2 around 175. Notice we have a nice little volume ledge right in here. I might even entertain 177, another little volume ledge up in there. But I am looking for higher highs, but not before we may pull back. So I'm not going to be surprised to see a little bit of a fatigue before we pull back. If we don't, great, right? If we do pull back, there might be an opportunity for an aggressive entry. If we close this gap, I'll definitely look at an aggressive entry, but there might be a nice little 50% pullback, maybe around the 169.80 area before we launch higher. So I'm not expecting higher highs from this point on, which is why we proactively paid ourselves, okay? I hope this makes sense, and I hope this is something you can start to put to work in your trading. Think about the risk. Think about proactively paying yourself. Think about being proactive about the triggers that are going to get you into your trades. We'll talk about all that and more on Monday. Looking forward to seeing y'all in the webinar. In the meanwhile, enjoy the rest of your day, and I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.